We're excited to introduce today's guest, Jeremy Dyer of Rise 48 Equity. Today, we're going to talk about a lot of things. We're going to talk about what is the pathway to transition from not knowing how to invest passively as an LP in real estate syndications to how to do it properly, what to look for in order to vet sponsors, some of the different types of splits that you can get into and why those are important, and why it's important to invest with somebody that you know, like, and trust. Welcome to the show.
The views shared on this podcast are those of Mike Sowers and do not represent those of Commercial Investors Group. The information shared is not investment advice. Please consult your financial, legal, and tax advisors before making an investment decision.
There are two kinds of people in the world. Those that worry sharing their ideas will hinder their success, and those who are driven by the success of others. The first kind view everyone as a competitor. They guard their playbook tight to their chest, rarely collaborate outside their inner circle, and are reluctant to show their cards. Then there are the second kind, the kind who have graduated from the first category. They don't count the number of deals they've done. What counts to them is the number of people they impact and the depth to which they impact them. Achievement is still important to them, but it's subordinated to the depth of their purpose. So they give freely of their time, knowledge, and expertise to build a bridge for those who follow in their footsteps. These are the people who were called to change the world. These are the people who develop people, places, and ideas. And this is the show where they do it, on the Creative Commercial Real Estate Podcast.
Welcome to the show. Today I have a very special guest, and I know we've been on a couple-year hiatus, but Jeremy Dyer is on the show today, and I couldn't be more excited to have this discussion. Jeremy really has been blazing a path in the space of how to help people retire faster, create more freedom in their life. He ranked number one in sales across the nation for 3 years into his career. He was seeking out financial freedom in 2019 through real estate. He just kind of began this journey of a fix and flip of single family homes while managing a full-time job and balancing his family life as a husband and father of four. That's huge. But realizing his passion for passive investing, he transitioned to raising capital and amassing over $45 million just as a side hustle. So I'm going to let him tell you a little bit more about that. But without further ado, I'm going to turn it over to you, Jeremy, just to give us a little bit of your background and tell us about your journey. Welcome to the show.
Yeah, thanks for having me, Mike. And you did such a great job explaining my background already. So I'll see if I can try to maybe fill in some of the gaps here. But for your listening audience to know, I really cut my teeth in sales right out of college, and I was very blessed to be able to, really raise up through the ranks. Rookie of the year year number one guy in the entire company in all of North America by year number two. And I was really able to ride out those commission checks and bonus checks. And my wife and I were very blessed to be completely debt free in our mid 20s. Had a couple of kids, was maxing out the 401k after the first quarter of every year, and just really had extra dry powder cash on the sidelines to invest. And so we thought about, well, let's start investing into real estate. And so we started a fix and flip company. This is back in the global financial crisis days where you could still buy houses at $90K a door, stick $30K in and then sell for $250. And that process was going really well for us, Mike. However, the challenge is in 2015, we doubled down on kids. So we went from 2 kids to 4 kids. And all of a sudden, my older boys are actively involved in, youth sports and their activities. And, they want me to coach their teams. So, that was consuming my nights and weekends, spending time with my family. And so it just got to the point where I told my wife one day, I said, honey, I can't be riding 2 horses at the same time. I can't be, committing 40, 50, 60 hours a week to my high-tech sales job, while at the same time, building out a growing real estate portfolio and trying to be a good husband and a good father all at the same time. So honestly, it was a bandwidth thing for me. So back in 2015, we decided to exit the single family home ownership business. Thankful to have had that part of my journey because it really allowed me to learn, about fixing and flipping and owning real estate and underwriting properties and so forth. So 2015, we went passive. We invested in our first investment property back then. We've since continued down this path. We're now in 39 investments as limited partner investors, multiple different asset classes, different sponsors, different geographical locations. We've had deals that have struggled, and we've had deals that have been, grand slams and everything in between, right? And so it was really about 2.5 years ago that I started to tell my friends and family about how my wealth building trajectory had completely changed, after having been a passive limited partner investor at that point now for almost 10 years. And so honestly, I was just telling friends and family, hey, I'm sticking 50K or 100K in this deal. You want to get into, kind of a thing, right? And lo and behold, I had no idea, but the appetite out there amongst the busy professionals in this world, the higher income wage earners, was incredibly strong. A lot of people wanted to invest and deploy their own capital into deals that I was currently and also going to put my own money into, because they were seeking things like monthly distributions and appreciation and tax benefits and diversification outside of Wall Street and into Main Street. Of course, when it comes to Main Street, you've got a couple decisions, right? Do you go start up a business, buy a business? Do you, get into a franchise, right? And effectively invest into the playbook of a current franchise brand, or, do you become a passive investor, right? That's really what real estate is. It's mostly on the passive side for our investors, but we're also giving them the same ownership benefit, right? So they receive the same ownership benefits as if they're the active operator, owning that property. And so that's where I was 2.5 years ago. And in 2.5 years now, I've surpassed over $50 million in capital raised, largely from my own personal and professional network. This is a group of individuals that already know, like, and trust me, because I've had a relationship with them, for over 2 decades at this point.
Man, that's huge. There's so much in there. We could talk for the next 17 hours on that. But what I really want to talk about is, you're an incredible sales professional, a true sales professional, and I don't say that lightly. And, one of the things that I want to talk about is you meet with a lot of people, these busy professionals you're going after. What separates the ones who just don't get it from the ones who really get it, just in terms of their mindset and how they look at these things? And what's the shift in kind of like the training or the molding that you kind of have to do with them to move them from not really getting it to fully understanding why this strategy makes a lot of sense?
Yeah, no, I appreciate that. And you're exactly right. I like to tell folks that, trust is built one drop at a time. You lose it in bucketfuls. I've just had a long enough history, both personally and professionally, always continuing to expand, my network, get to know other people, in a professional and a personal sense. And so really, I would say, kind of my secret sauce, so to speak, is that I'm very transparent. I'm genuine, and I'm authentic, right? You don't have to get very far into a conversation with me where you fully realize that I'm the same guy in this conversation, than I am, 365 days of the year, right? So I think a lot of people, just in general, they're attracted to people that are transparent, authentic, and genuine, okay? Because that's not oftentimes what you see depicted, whether it be through the media or whether it be through, scrolling through Instagram, et cetera, right? And so people have a hunger to connect with and get to know and expand relationships with people that are authentic and genuine, if that makes sense, okay? The second part of your question was related to really the investor mindset, right? So most of the people that I talk to already have an appetite or a desire to escape the shackles of Wall Street, okay? Not necessarily abandon what their financial advisors are telling them to do, but at least diversify, right? Outside of Wall Street and into Main Street. So there's already that hunger there. The second thing that's prevalent is the individual also has potential dry powder on the sidelines that they can invest, right? So most investment offerings out there have $50,000 minimums. Well, if you don't have $50,000 in accessible cash or $50,000 locked up in an IRA, it's probably not going to be a good investment option for you. The one thing that I highly recommend that all investors do is if they are not familiar with investing in real estate, okay, from a passive limited partner perspective, and they don't have the time to attend real estate meetups and conferences, they don't have time to join master classes, they maybe don't have time, to invest in themselves first, I always recommend people at a minimum, okay, I want you to read a book, not because it's my book, but because I spent 600 hours trying to educate the busy professional on everything they need to know and understand before they ever vet a sponsor, before they ever deploy capital into an operator's real estate deal or otherwise. I am a huge proponent, okay, of educating investors. I'm a huge proponent of encouraging people to not invest in anything unless they fully understand it, okay? The challenge with Wall Street is most people don't understand it, okay? They don't understand why stocks go up on good news, on bad news, and why do stocks go down on good news, right? So it's a challenge that people don't oftentimes understand. And so I really encourage people to get educated, number one, and then take action, okay? So once you've amassed the right amount of education where you feel comfortable enough with the strategy, maybe that's listening to podcasts like yours, Mike. Maybe that's reading my book, The Fundamental Investor, right? To educate yourself. Once you've gotten to that point where you understand the investment strategy, all right, and the nuances associated with it, then the next step is to take action. Oftentimes I have investors, they get it, right? They know they want to diversify outside of Wall Street and into Main Street. They understand the power and the intricacies associated with private placement investments, right? The next step then is you have to take action. And sometimes investors will say, Jeremy, I've got 100K in cash on the sidelines. I'm going to invest that in your next deal. You know what I tell them? Don't do that. Okay. Let's do 50. Okay. Start out with the minimum, right? Because you're going to learn through the process. The only way that you're really going to truly be able to vet out a sponsor or to vet out an opportunity itself is by deploying capital into that deal. Okay. A lot of times limited partners, they think that they're stress testing a deal or they're vetting out a sponsor or they're vetting out a deal and doing their own due diligence on the deal. The problem is they're only looking as far as the offering memorandum that everybody already also has access to. So I think it's impossible for a limited partner investor to properly do their own due diligence on a sponsor or on a deal unless they're leveraging somebody that has a seat at the table on the inside. Does that make sense?
Yeah, 100%. Right. The offering memorandum is from the sponsor. It's what they want you to see. And if you're not, an expert in this area, it's very difficult. Like, we understand you can tweak the disposition cap rate and make a shitty deal look good with one tweak. So it's being able to understand all of that. I think it goes beyond the financials, though, to what you're saying, which is really, do they have a good strategy? Do they have a good system? And, some people, it's like interviewing for employees, right? Some are really good at interviewing, but you never really know until they've actually onboarded. So I love that advice. It's hard to say no when somebody wants to invest, but being able to tell somebody to take it slow, I think, is really prudent. One thing that stands out in my mind for you is, you're invested, you're saying, as an LP in like 39 deals, but you're also helping LPs come into your fund, and then your fund is investing in other projects. So you're kind of on both sides of the coin, where like you've got really good at vetting out projects and partnering with sponsors who actually run the show. Because let's talk a little bit about how you vet your sponsors. What are the things you look for when you're deciding to put other people's money into somebody's project?
Yeah, it's a great question. And actually, it's not just a great question, Mike. It's the only question. Let's be honest. If I was to stack rank all the different decisions that an investor, ought to look at before they deploy capital, it's not the deal, it's not the pitch deck, it's not the market location even, it's not the business plan, it's not even maybe the debt structure to a certain extent, although that can be argued with respect to what happened in the last few years, which I'll address that in a minute as well. But really, it comes down to the team, right? The sponsor team. And it's not just the lead sponsor that's making the decision. it's also the team that they're surrounded with. Because if you're looking to deploy capital into a 200 to 400 unit apartment community, I can guarantee it's not one guy running the show. Okay, it's an entire team, right? You know, you've got a property management team. You maybe have a community manager, right? You're going to have a construction management team with a GC license if the plan is to renovate the units and force NOI growth as part of your strategy, right? You're going to have a building maintenance team. You know, you might have third-party suppliers, right? Like HD Supply or Builders Warehouse, right? For example. So you've got all these people involved in this process of acquiring the deal, right? Your acquisitions team, all the way through disposition, right? And that time period can change. It could be, you know, 3 to 5 years. It could be 2 to 6 years, right? We're not quite sure when we're going to sell, you know, the property in the future, but you have this entire team that you're surrounded with. So has this team executed this plan before, right? How many times have they done it? What has been the outcome of those acquisition, you know, through dispositions? What has the return profile looked like for the investors? But beyond that, let's talk about all the headwinds. Okay, let's talk about your track record. When did you sell those properties? Oh, great, you sold them at the last peak of the last real estate market. Well, you got lucky. Okay, right? You know, let's talk about your 2021 and early 2022 acquisitions, right? That haven't gone full cycle yet, right? How are those performing, considering the fact that you bought those properties at the peak of the last real estate market, right? You know, what are some of the headwinds that you're experiencing today, you know, as an operations team? How thick is the ice underneath your feet? Meaning, are you having to immediately go to investors with capital call requirements because you don't have enough liquidity at the property level to extend out the loans now that we're in month 36, for example, of a 3-year bridge loan, right? You know, or is there enough liquidity at the corporate level in order to be able to continue to support those assets? So there's a lot more that I can say there, but the one thing that I want people to understand is that real estate investing is not a get rich quick scheme, okay? It can take 5, 10, 15 years or longer in some cases where you can start to build up your momentum, right? There's going to be deals, okay, that look like they're home runs on the surface. And they very may well be home runs at the end of the day, but they also might be a base hit or a double, right? The worst thing is losing your capital, right? So it's really important for people to understand that, you know, is the sponsor aligned with you? Okay, meaning, do they make money when you make money? And are they focusing on the single most important factor, and that is investor capital preservation, right? If you're not completely dialed in and comfortable with an operator's ability to execute a business plan amidst headwinds, amidst whatever the next black swan event, you know, happens to be, then that is not a deal that you should invest into, even if the pitch deck looks amazing.
Mm-hmm. Yeah, super sound advice, man. Well, I'm going to transition to our closeout here. One thing I always ask people is if you could talk to yourself when you were 20 years old, what advice would you give yourself?
Well, when I was 20 years old, I didn't lack tenacity. Okay. I had a lot of tenacity, and truth be told, I made a lot of mistakes. Okay. I write about this in my book. I felt like I was in my 20s. I felt like I was a construction worker. I'd go make a mess, then I'd clean it up, right? Well, that really arguably allowed me to, you know, have experiences where I failed, where I was able to fail forward, where I was able to learn from my mistakes, right? Where I was able to really push the limits of what's possible, okay? And I talk ad nauseum about those mistakes in the Fundamental Investor book. But here's one thing that I wish I had done differently, okay? I wish that I had saw the tremendous value of surrounding yourself with people that are 10, 20 years ahead of you. I had a lot of great mentors, but I didn't have enough, okay? So I would encourage any young, early 20-something, you know, high school student, college student, you know, a young married couple, right? Find people, okay, that have done life before you. They're 10 years ahead of you, 20 years ahead of you. Right now, I've got a little bit of gray hair, but I surround myself with the guys that have a lot of gray hair, right? because these are guys that have been through multiple economic cycles. They understand the risks associated with the geopolitical market right now, right? They've been there, done that, and they can speak into a younger, 40-something guy like me, and they can tell me, Jeremy, this situation that we're in right now in the current economic environment, we've been here before, right? Why they know that is because they lived through it, right? And so they can give me that kind of peace of mind, that assurance, right? Kind of dispel some of the fears. And honestly, the feedback that I get from most guys that are 20, 30 years ahead of me at this point is, Jeremy, this is a tremendous time to buy, okay? Like when there's blood in the streets, when there's fear and uncertainty, right? That's the time that it's really time to get into the business. The time to get out of the business was back in 2021 when everybody was making a ton of money, right? By buying properties and just watching cap rates compress, right? These are deals operators bought that didn't even have to renovate a single unit. They didn't have to force any NOI growth at all. Yet they were just, buying and acquiring properties and watching those cap rates compress and making money. Well, those were the times when we should have been running away from the fire. The challenge is a lot of people were running into the fire, and we now know how that ended up for them because they've been distressed operators. I mean, there's a lot of operators in the space today that have had to give the keys back over to the bank because they haven't been able to afford, the debt service on the loan. So I think it's just important for people to understand, if you want to become a better version of yourself, well, work on it, right? And one way to work on it, of course, is to surround yourself with others that have gone before you.
Yeah, man. Super sound advice. If you had one day left to live, how would you spend it?
Well, for sure, I'd spend it in prayer, right? Number one, in terms of, my relationship with God. But, second to that, it would be honestly spending time with my why, and my why is my children, right? My wife and I started dating back when we were just young teenagers. We dated for 5 years before we got married. We were young married couples for 5 years before we had our first child. So, I mean, we did a decade of life together, before we brought others into the world. But, I since now have, four children, and that's really the reason why I, get up and grind, every day, is to really, give them not just the opportunity to survive, but to thrive.
That's amazing. Well, thanks for coming on the show. I appreciate it. And if anybody wants to get additional information, you can always message us on our podcast line and we'll get you connected with Jeremy and his team. Thanks so much for checking out the show, and we appreciate it. If you want to learn how to make money on these types of deals through our diversified commercial real estate fund, please reach out and inquire and schedule a call at www.cre-fund.com.